it's a pause, not a pivot.
Let us understand the terms used here by RBI Governor Shaktikanta Das after the April 6th MPC meeting. Since May 2022, the MPC has increased the repo rate by 250 basis points to tame inflation. The repo rate is the interest rate at which the RBI lends to banks. Increasing it makes credit costlier, which in turn reduces consumer demand, and cutting it boosts consumer demand. Thus, the repo rate is a monetary tool used to control inflation. However, the full impact of hikes in the repo rate takes time to materialize. Increasing or decreasing the policy rates affects both growth by way of affecting demand and inflation. So, a balance has to be struck. Otherwise, there is the risk of overshooting, where the decline in growth is more than what is needed to tame retail prices. So, when the MPC decided to keep the repo rate unchanged after 6 hikes in a row, its calculation was that inflation was projected to moderate in the current financial year, even as the rate hikes brought in since May 2022 were still working their way through the system. Thus, the pause that the governor was referring to is basically the MPC deciding to take time to see how the past hikes play out. However, a pause doesn't mean that the MPC won't raise rates in future meetings if inflation warrants it. That is why the RBI governor also said that the MPC's job was not yet finished. The other part of the RBI governor's statement, given after the April 6th MPC decision, was that it's not a pivot. In this context, a pivot would occur when the RBI reverses its existing monetary policy stance. This would typically happen if economic conditions have changed to the extent that the RBI can no longer continue with its existing monetary policy. A pivot could also mean that rates have peaked and they may be cut in the future. The RBI has 3 broad policy stances. An accommodative stance means the central bank is willing to cut interest rates to boost economic growth, while rate hikes are ruled out. It is adopted when growth needs support and inflation is not an immediate concern. A neutral stance means the RBI can either cut or increase rates and is adopted when both inflation and growth have equal priority. Under it, the interest rate can move either way based on incoming data. Lastly, a hawkish stance means that the RBI's top priority is to control inflation. A rate cut is nearly certain under this stance.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.